Today's briefing by the troika of the European Commission, the European Central Bank and the International Monetary Fund was the fourth since Ireland was bailed out in late 2010, and it was very similar. They're becoming quite repetitive. The troika was very upbeat, positive about the way the bailout program is being implemented. There was no major issue that they could see, and they were fulsome in their praise of the government in terms of how it's implemented the terms of the bailout. That said, there are a number of things that are coming down the line. And one of them it relates to the potential for supplementary budget measures if the government doesn't meet its budget targets in 2012. Now, there did seem to be small differences between the three members of the troika in terms of what should be done if the government doesn't meet its targets. In December, the International Monetary Fund said that it didn't believe there should be additional measures if those targets aren't met. Today, the Commission and the ECB took a very slightly different line and left open the possibility, and that reflects the different views those institutions have taken. At one extreme, the ECB is the most fiscally hawkish. It believes strongly in austerity as a way of dealing with the problems in the peripheral countries, whereas the International Monetary Fund tends to think that too much austerity is self-defeating. So there are differences, and well-known differences, between the institutions on those issues, and they could manifest if the government doesn't meet its targets as the year progresses. Another issue that's been on the agenda recently is a second bailout. Now, this wasn't discussed at all at the meeting because the troika and the government believe that it's not necessary to discuss this. Though it should be said, and maybe it hasn't got enough attention in the debate about the second bailout, that in July of last year, European leaders did say after one of their summits that if Ireland needed extra money, that would be made available. So no immediate development on a second bailout, but by the end of the year, if Ireland is not shaping up to get back into the bond market, then talk of that will resume. And it's likely, if current international circumstances remain at least not, if they don't deteriorate, then a second bailout will be possible. Another issue that's received a lot of prominence recently has been the debt Ireland has taken on to bail out its banks. This is highly controversial. It involves tens of billions of euro. That the gains, if there have been gains from these lendings and borrowings, depending which side you're on, they would have been kept in private hands. Instead, those investments didn't work out, and the Irish taxpayer is picking up the bill. So understandably, there's an awful lot of controversy about what should be done with these. The Irish government has been pushing for some sort of Europeanisation of this debt. In other words, that the other taxpayers around the rest of Europe who've benefited from Ireland not defaulting on these debts would in some way participate in paying them off. Now, that is being discussed, and the troika today said that this was being discussed, and they talk about technical discussions on this. Although the chances of Ireland having some of these debts simply written off remain slim, but the prospect of some adjustment to the terms of the repayments, which would ultimately on the longer term reduce the burden of the Irish taxpayer, does appear to be increasing. The question is, will it be a significant change, or will it be one that's more symbolic and therefore not really help taxpayers over the longer term? Another issue on which the troika appears to be showing some flexibility is what to do with receipts from privatisations. Originally, the troika had wanted all proceeds to go towards paying down debt. The new government elected almost a year ago was insistent that some of the proceeds should be used for reinvestment, stimulus, job creation. The troika now appears to be showing some flexibility on that issue. It's likely that in the future the government will have to come up and make a strong case for what it's going to do with that money. If the government can make a case that convinces the troika that the money cannot be raised commercially, but the returns on any investment in terms of jobs, in terms of greater efficiencies of the economy are worthwhile, then it does seem as though the troika is prepared to enter into discussions and okay the use of some privatisation receipts for investment and job creation.